Chap-
With lesson 8 and 9, we were looking at framing setups around market structure, support and resistance, and then liquidity. These three most important concepts that I find that if we are to understand them and merge them, we will be able to have some good setups. So we looked at the conditions for framing the structure of a setup yesterday, and we're going to continue today. So first, to remind ourselves, we said that we have to look for impulsive reaction or move of an area of interest. This will provide an indication or a lead. In other words, to show the intention of the market. And especially when this impulsive move breaks structure. So that will show us that there is a change in the state of delivery. The change of the state of delivery or the shift creates our structural range or swing range. Once that happens, then we can expect a corrective move. And the corrective move normally will be like a pullback or retracement, which will normally target taking liquidity. After the corrective move, we look for engulfing pattern or price above resistance or price below support in case of a bearish movement, price above resistance in case of a bullish movement. And also within that range, we can log into smaller time frame, find another break of structure there, and then we can join the move. So these are the conditions or the things that we will need to see. And this was an example of how the structure will move like where we have a bearish market, price making lower lows, lower high, lower lows, lower highs, until it gets to a point where an area of interest where we see price shifted to take out the last lower high, drops, pull back for a corrective move, but price went up again to give us a second break of structure. And then this time, the bigger corrective move happened where it takes out liquidity from the internal low that we see there, and then finally price moves to the upside. As it gets to the upside, it start making break structure, make higher high, lower high, higher high, lower high, higher high. The last lower high um, got invalidated or broken. That shows us that price is about to go bearish. So we wait for price to move to the upside to retest, and then it drops to the downside, pushes up, drops to the downside, sweep liquidity below all the lows, the equal lows, and then now we see a bigger move that happens. So this is an example of what we might see. We went through again what liquidity is. We said liquidity itself is what the institutions are targeting. Whatever the institutions want to capture is called liquidity. And we know that is money. Um, And then we were looking at the types of liquidity. We looked at the external liquidity, internal liquidity. We look at structural liquidity and then inducement liquidity. Um, so we got to support and resistance. And today we are going to focus on support and resistance so that after we finish with support and resistance, then we can put all of them together and then we can frame a strategy for our trading. So support and resistance are zones where price historically react because there are many orders that are around that zone. Um, they serve as areas of interest, and market is likely to hunt or fake breakouts around these areas. Support is level where buyers step in, where buyers comes into the market. And resistance is the level where sellers also comes into the market. So resistance is like the ceiling, the roof, and then support is like the the floor. So the simple logic is that when price is above resistance, you can buy. And when price is below support, then you sell. That is a simple logic. Okay, so keep that logic in mind. We will get to it when we go to the chart. We buy at above resistance and we sell below support. Salim, can you say it for me to hear? We buy above resistance and we sell below support. Is Salim here? Salim? Okay, good. Support and resistance are not just magical zones. They work because of liquidity. When broken, they often flip roles. Support becomes resistance and the vice versa. So when you break support, it can tend to be resistance. And when you break resistance, it can also tend to be support, especially the main or the strong um, support resistance zones on the chart. So we have to use support and resistance as reference point for liquidity hunt. Always around those strong areas, there will be a run for liquidity in that areas, and we have to be conscious of it. Okay, because support and resistance exist because of liquidity, because there is money below and above them. So though we support and resistance helps us to get our strong bias for buys and sells, at the same time, there are also areas that we can be stopped out. So we need to be conscious of both. But we want to see how we can put all of them together to frame our trade. Buyers are sitting above main resistance and sellers are below support. Buyers are sitting above main resistance and then sellers are below support. So let's now go to the chart and then we can identify main support and resistance zones. Then we will try to put all the concepts we've learned together: the market structure, liquidity, and support and resistance. We can put all three together so that we will be able to frame our setup. So let me just go through this quickly before we move to the chart. Putting all together, one, we are looking out for an impulsive breakout that gives us BOS, and that will tell us the direction. That's the first thing we are looking for. Number two, we are going to be conscious of liquidity. That tells us where price is headed next, and then where price will pull back to. So that's liquidity will help us to understand that. And support and resistance will highlight to us where the liquidity is really hiding. And it will also give us the energy to participate in the market. So putting these powerful ideas together, we want to see how that will sound when we go to the chart. So here, I'm going to go ahead to go to a live chart. What chart should I use? Okay, we've been looking at 25 index for some time now. So should we use the same pair, or can anyone suggest a pair that we want
Try
to?
step 100.
Step 100. Okay.
Yes, sir.
Is that Uche?
Yes, sir.
That's your favorite pair, right?
That's the one I'm not trying to master very well.
Okay. So this is step index 100 on 30 minutes. So I first want us to use our higher time frame, which is 24 hours. So within this analysis, we have to bear in mind that top-down analysis is also part of it because that gives us the exact or the right bias. Um, can you guys check your MT5 on step 100 and go to the weekly or monthly time frame and let me know if there is more price action. This is 24-hour on the trading view. Let me know if there is more price action below this area. First, check the 24 hours and see if you can see what I'm having on the chart now. And then let me know if there is also more price action above this area because the derivative trading view does not give all the data. Because if there is price above or below, that is going to help a lot. It's going to help a lot in the bias. Yeah. But so Uche, can you check for me from your MT5? Uche, are you there?
Yes, I'm trying to go to MT5.
Okay, perfect. So let's see. Okay. Uh, yeah, so this is 50 index. I will explain why I'm looking out for if price will sell off this area. Maybe I'll explain as we go into the class. Yeah, so I'll explain this. Okay, so let's continue before you get me the data. So right now, from the chart or from what I have right now, because we have to know if there is data above, then we will be able to understand why price had to stop at the top here. Okay, that will help us. And that will also tell us then this drop to this area. That will tell us whether this area is going to be the final stop or price is likely to drop more down like this. But from what we
Okay,
see,
what was the question? What I think I've gotten to step in the
okay, so is price
on.
above to the top here? Is there price action, a lot of price action up here?
No, I'm not seeing anything above that level.
Okay, you are on
There's nothing
24
above
hours.
that level
Okay. What about below? Uh,
below.
Does anyone in the call has step? Can you all check? Check the weekly or monthly.
Weekly. Okay, let me go to weekly.
Check weekly and monthly. It will load, and then you'll be able to see if there is an activity to the upside.
Okay.
Yeah, but from what we have right now, um, so number one thing we have to do is to map out our structure because the structure gives us the direction. After mapping up the structure, then we will look for the support resistance zones on the chart. And that,
Below.
yes, Tolu, 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 we are listening. Okay.
I think I'm having network project.
So from here, we have this high here. We have this area. Let me use the rectangle. We have this area here. and then we have this area here. So price was high, then it came down and then took these lows. So price from up here hit this area, moved up, hit this area. The last high that broke structure is here. Okay. Can you all see that? The last high that broke structure is this area. But if we want a better, the main high, the main structure, we came from here. We came from this area. We came from this area and we swept this low to the downside. After getting this downside movement, we have not had any price action come around here before. So what did we say? Price breaks a low or closes above a low. Price closes below these areas. So we have at this level, price buys. It hit the same level again, it buys. Hit the same level, it buys. This time it hit that same level, it went up a little bit and broke to close below it. So let's all see that. Please pay clear attention. Okay, please pay attention. So what is the meaning of this? Uh, If we are using support and resistance, what we will say is that there are buyers here. Okay, so anytime price drops into this line, the buyers will push it above. And once price goes above this line, it sells strongly. Can you all see that? Anytime price hits this area, it rejects, goes up. But the moment it goes above the line, price buys. Okay, which means that price is above. So above the line is resistance, and below the line is support. So this same line that we see here, we can take it as both support and resistance. Okay, so above it, buyers are in control. Below it, sellers are in control. So let's see here. The moment price, this big bearish candle that came from here, the moment it hit there and was able to pierce through this area, we see price had a very big movement to the downside. So this is an indication that because of this bearish movement, how big it is, it means that below this area, sellers are in control. So we have to pay attention. Below this area, sellers are in control. The reason is just simple. The reason is because this candle is very, very big. The volume in this candle is very, very big. So if price comes here again in the future, the moment it breaks below this line, we are going to see sales. The moment it breaks below this line. But once it breaks below and then something happens and then it moves up, closing above this line again, above this resistance, buyers are going to step in and take the price up. Once it's below, sellers are going to be selling. Okay, so what we can say is that, again, is that sellers are just above the line and buyers are just, no, buyers are above and then sellers are going to be below. Okay, but the reverse, the vice versa is that if price hits that level, buyers have to reject it above the line. Then it is above the line that the buying power will really step in. And also, if price hits the line, okay, if price hits the line, or if price is going up and hit the line, sellers will have to reject or stop the price, push the price down. But the moment it goes below this line, then sellers will take control or will take charge. Sellers will be in control until price finally reverse again and then closes above this line. Then buyers will come into play. I don't know if you guys are getting me, but so I want you to understand that. That's the first thing I want you to know here. The other thing is that the moment price closes, price sweeps below this support. One, this is an indication, an intention that the market is giving to us that some time to come, price is like, because price breaking or closing below this area means that it is a break of structure. We break to the downside. So from this high, we hit this equal here and make equal lows, push up, break structure. It means in future, we are likely to break below this area and keep going low to make new lower lows. Are you guys getting the concept that I'm trying to explain? I'm saying different things all around what is happening here. One, the support and resistance line here is means that when price gets here, buyers will push it up. But the moment it's above the line, then the buyers have power to now buy. The rejection doesn't mean that buyers are going to come in. It's only when price goes above that the buyers the power comes in. So you can see the body of the candle really becomes big when it is above the line. When it's below, is we only see rejections. Okay, when it's below, we are only seeing the rejections. Okay, so but then once price was able to break through it, it is an indication. One is a break of structure, and two is an indication that the market is giving us an intent beforehand that a time is going to come that I'm going to go bearish because I have closed a body below this area. And the volume here is very big. It's a large bearish candle. So if buyers are not able to stop and push price above this line and it keeps selling into here, the moment we close below this low here, price is going to continue trading bearish to make a new low. That is what I want us to pay attention to. So these are two insights about support and resistance areas. Okay. Um, if you don't understand, please draw me back and then we can explain again. Okay, two. The other thing is that the moment we have seen price was bearish. So let me even use this trend line to see here. Price was bearish. Okay. The moment price pushes up and takes out the most current high, which broke structure, the moment price pushes up to take it out, we have a change of character and a break of we have a change of character and a break of structure. We have a change of character and a break of structure. So what did we say? Once we see a break of that previous high, what do? We now have a valid area of interest or a valid swing structure. We have to use our fib to measure from the low to that high that broke the structure. Okay, and what are we looking for when we do that? Uche, now what are we looking for, please? Uche, when we measure, are we going to be looking for? Uche, what are we going to be looking for?
Is it the golden zone or I don't know.
Okay, so we look for because we have shifted to the upside. Though
Hmm.
price has told us that it wants to go bearish, it
Yeah.
quickly also shifted and told us it wants to go bullish first. So
Hmm.
we look for price at discount. We look for price at where? Below 50%
Discount. Okay.
discount.
Below. Yeah.
Good. We look for price here. So this is our first point. So now we've seen that we have to look for the double confluence. We have a line here. Let me make this line big. We have our support and resistance line here, which is the red line. Above it, we are looking for buys. Below it,
Yes.
we are looking for sells.
Those. Yeah.
Okay, that's the first thing we discussed.
Yes.
Okay. Yes, above it, price should buy. Below
Yeah.
it, price should sell. That's the
So.
first thing. Now, the second thing we are doing is that because there was a shift to the downside, but quickly price shifted also to the upside. So we are going to play with the current data, which is the upside first. Though in future, price would go down. So that
Yeah.
is at the back of our minds. So now, what do? We have to now now we measure. We At first we would expect price to come to discount and then buy. But where did it come to? 38.2%.
That's 8.7.
Good. So it did not come to discount.
No.
Good. So if we miss the trade, no problem. Okay. Our setup is still valid. Why? Because of the change of the state of delivery. So let's wait. We have to wait. So now we keep waiting. We are combining all the concepts now. So now we keep waiting. We have changed structure. We keep waiting. Price moves up again, and then now it takes this area out. Once it took that area out too, we have, because that is the bigger high, it took it out. So we should expect price to like drop into 50% or discount again.
Yeah.
Oh, good, good. So price should drop below this zone up to here. Let me give this one color green. Did price come there? No,
No.
we have not seen that yet. Let's see. Okay, we are just having a tip
Mm.
of a drop. Good. Perfect. So now we broke structure to the upside. This is external structure. The first one we're looking at was internal structure. This one is the external high that has been taken out. We just
Okay.
retested and moved up. So now, what we are waiting for is price to drop where? Into this zone.
Into the disc. Okay.
Yes. So if price drop into this zone, we have to buy. But where do we buy? We buy only above the red line, which is
Yeah.
the above
Yeah.
the resistance.
Yeah.
Why? Because anytime price get to this area, it buys. And we have
Yes.
seen that multiple times. Are you guys getting the idea?
Yes.
Perfect. So we have to keep waiting. So now, from the upside, price goes up, make higher high, lower high, higher high, lower high, relative equal highs, higher high, equal. So finally, the last low that gave us the all-time high is here. We broke it.
Mhm.
And now we are dropping to the downside. So we broke it, we went up to retest. Okay, so now we are bearish. We've been bullish before, but now we are bearish. So where is this bearish move going to? We broke structure to the upside, and now we are bearish coming to the downside. So this is the impulsive move up. We are waiting for the corrective. We are waiting for what?
The corrective move.
Good. And the corrective move, we said, would have to mostly have to sweep liquidity on the way. So we see price drop, go up, took the high, broke structure, pull back, drop is dropping again now.
Yeah.
We are likely, so let's measure the whole activity itself. If we measure from down here to the up here, we could see that price traded into 61.8%, pushed up to 50, dropped back to 61.8, pushed back to 38, and is dropping again. It's likely it wants to use this double bottom as liquidity, sweep it up, and then enter into our area of interest.
Mhm.
When it gets here, we don't just buy. We have to wait for another shift of structure. It could even trade into, okay, it could even trade below, okay, below the red line. Okay.
Okay.
So we have to just be patient and wait. But once it moves up and then shift structure to the upside and price is above the red line, that is
Mhm.
our buy entry. Do you get it?
Yes, is this going to be like this analysis now will be in 24 hours or
This
lower time frame?
this is 24 hours. So if we see price hitting this area on the 24 hours, then we
Mhm.
have to shift into 8 hour, 4 hour to see if there is a change in character like we did on V25 the other day,
Mm.
yesterday. We have to now zoom into this is 4 hour now. On the
Yeah.
24 hours, if we see price has traded into this area, then we will now move into 4 hour, 1 hour, 30 minutes to see if there are the internal shifts
Mm.
around this zone and if price goes above the red line.
Yeah.
You get the point?
Yes.
And it is only when that is confirmed that if you buy, you are likely to get a good swing and entry that will give you a new high. If we don't wait for this, we'll be getting stopped out, stopped out. Price might even decide to even sweep this area, okay, and make a new low. But it can impulsively move up again. Once it comes above the red line, that's our
Mm.
buy entry.
That's a buy.
Good. It's just as simple like that. Adding support, resistance, and the market structure and liquidity. So this will mean that price came to take this low as liquidity. That's all. And quickly moved into the range and then broke structure and we buy above the resistance. That's all. So all that we've been learning, putting together is this. Okay. But
Okay.
if we now want to participate in the sell, because we anticipate that, that's why I wanted to know, is there activity above here? Because all those things will let us know why the price hit here and then started falling. Because all those areas will let us now know at what level that price got to before it started selling. Because we have a perfect shift or break of structure to the downside happening right now.